You're entering CNBC-TV18's virus-free studio, powered by Century Laminates and Century Ply.
Welcome back, and let's welcome the new chairman of State Bank of India, Mr. Dinesh Kumar Khara. Mr. Khara, thank you very much indeed for joining us, sir. Well, my first question to you is that, what is the vision you come with? When Rajnish Kumar left, he was extremely happy with the way YONO had progressed under him. He was quite passionate about it when he spoke. What are you coming with your 1, 2, 3 list of priorities?
First of all, thank you very much, Lata, for having me on your show. I was part of Mr. Rajnish Kumar's team.
Yes.
So I think YONO is one accomplishment which we have in last 3-4 years. It has really given us an edge when it comes to the digital channel for offering banking services. Actually, YONO is even beyond banking.
Mm-hmm.
It is not merely banking, it is also a financial superstore where we are in a position to offer the services relating to all our subsidiaries as well. Mm. And apart from that, it is a very important component when it comes to e-commerce. As in the current scenario, which is actually post-COVID, it's a situation where we have a larger dependence on this kind of a channel for reaching out to our customers. It has really proved to be a great success. So I think going forward, we'll be leveraging this channel to its hilt. Apart from that, we will also be leveraging the analytics and that is something which we would like to really focus on and see that we are in a position to optimize our cost of sourcing variance. Mm. As of now, we have almost about 490 million customer base, and we have the benefit of the data. But we look at that data only as a static event. So once we start looking at that data, and which helps us in having some kind of a insight into the customer's behavior, perhaps we'll be in a position to reach out to the customers and offer them the experience which perhaps would be something which will help us in improving our position with our customers. Okay. We are serving our customers wholeheartedly, and we would like to see that we keep on creating value for them, and we keep on creating enhanced experience for our customers. So for that, we'll be leveraging analytics also. Okay. That is one area when it comes to YONO and its reach, and also the customer experience. I think it may not be out of place to mention that in one quarter itself, in this year, we have dispensed almost about more than 5,500 crore worth of credit, which is essentially the retail credit, as compared to about 3,000 odd crore last year on the same. So that itself speaks volume in terms of what is the kind of potential we will be in a position to exploit with the help of YONO. Okay. The second priority, of course, in these kind of situations, continue to be ensuring that the quality of book remains as we have created in past about 3 years' time. We have built up our provision coverage ratio very well. The quality of assets, the RWs have come down significantly. So that is going to be the focus on an ongoing basis, because that will ensure us that we can optimally utilize our capital also. And I think it will help in the significant growth of the balance sheet with the existing capital too.
Okay, of course.
Yeah, please.
Yeah, sorry,
please
sir. No, I'm sure my colleague Sonia also will have a lot of questions on asset quality, at least for the sector, even if you can't talk about the bank. But I just want to put both these things together that you said, the analytical thrust, the fact that you're able to sell so much more products via YONO. In your tenure, do you expect you will be able to squeeze some cost efficiencies, because you won't need such large branches? Of course, because of the missing middle, you will need all the people. But do you think you can economize because your digital is so good?
Well, Lata, I think the way I look at it is that considering the kind of the customer base and the clientele base whom we are serving, perhaps for a bank like ours, either digital or physical, we cannot have either of our situation. We will have to be physical, which means that we'll have to be physical as well as digital also. So having created this distribution network of about 23,000 branches, I would say that it is also an opportunity, because when it comes to the depth of the financial sector distribution, I think there is a whole lot of scope in the upcountry locations. And also, since we enjoy the trust of our customers, I think we can actually leverage this brand and also our distribution network and reach out to the customers with the products which perhaps suits their risk appetite. So I think that way, I don't look at branches only as a cost. I also look at branches also as an opportunity for leveraging more and more income for the bank. So that is what my thought is on this subject.
Okay. Mr. Khara, good morning and best wishes for a long innings in your new avatar. I wanted to ask you about the situation on the ground as far as asset quality is concerned. Where are you seeing a recovery between segments like corporate, SME, agri, retail, and what do you see as the way forward, say over the next 3 to 6 months?
So as far as the credit growth is concerned, of course, if we compare YOY for the system as a whole, it would be somewhere around 5%, 5.5%. Though for the bank, till the previous quarter, we have witnessed a growth of about 7% overall. But if I start slicing it, I would like to say that corporates are essentially looking at, they may not be depending only on the borrowing from the bank. They are also resorting to various other market mechanisms, market tools also. Market instruments, if I may say so. So because I have seen that corporates at times are substituting their bank borrowing with NCDs and stuff like that, because that is something which is a long-term instrument which is available to them, and they are taking benefit of the current market scenarios, and also they are all, some of them have actually gone for that. And if I look at that, for our bank, if I add the growth in the investment book as well as the loan book, I would say that the corporate sector, we have witnessed almost about 10% growth. Though otherwise, I would say that it would be somewhere around 7% for us. But when it comes to retail engine is doing well. It is growing at the rate of about 14%. And also, I would like to mention that for the system as a whole, practically in all fortnights, there is a growth in credit, but for one fortnight from April onwards. So also I would say that since with every incremental unlock process which has been initiated, there is a definite improvement in the credit offtake. So with this and also the recent measures which have been announced by the government in terms of festival advance and also LTC vouchers, I'm sure it will also lead to a positivity in terms of the demand creation, and which eventually will have an impact on the credit offtake also for the corporates.
Okay. Mr. Khara, what is your understanding of how the NPA picture will move for State Bank of India by the year end or by FY22, when perhaps the recast loans, you will know whether they are able to swim ashore? Any guesses at all?
It's difficult to make a guess as of now, but yes, of course, as a banker, we have to be very vigilant in terms of how is the asset quality moving, and also for that we have got some indicators which we keep on monitoring on an ongoing basis for various corporate accounts, and accordingly, depending upon the asset and the industry in which these particular loans are. So we are having our own mechanism and tools through which we are in a position to have a fair assessment. So I think based on whatever we have seen till now, I would say that, of course, whatever stress which might emerge, we should be in a position to handle it comfortably, considering the fact that we have already provided for our legacy book to a greater extent. So I think we don't see that it is something which might shake up the sector. But I think practically all the banks have also showed up their provision coverage ratio. So to that extent, since they have all dealt with the legacy, they should be in a position to handle whatever new stress which might emerge.
Permitting, I'll try and get back to you for any numbers on credit cost that you may be having in your mind. But first, I wanted to ask you, Is there any move that you may be chipping in even for Lakshmi Vilas Bank? Not exactly in the way you're helped in Yes Bank, but helping Clicks Group, or in any way, have you looked at the Lakshmi Vilas issue?
Not at all.
Not at all. Okay. Well, the other thing I wanted to ask you was about monetization. I think Mr. Kumar's last statement was that they're not looking at, SBI is not looking at any monetization of assets this fiscal. Will that change because the markets are, back to all-time highs almost? So will you look at monetizing or listing mutual fund? UTI is listed. Would you look at listing your erstwhile home, SBI IMF?
Well, I think this is something which is being talked about for quite some time. But actually, when we decide to take any of our company to the market, or for that matter listing, the very clear focus which we have is that the company should be the one which is matured enough, and also they are also the one where there would be a whole lot of value creation for the incoming stakeholders also. So on both the counts, mutual fund merit consideration. But I would say that I think it is, we have another JV partner in our mutual fund. So we have been enjoying an excellent relations with our JV partner. So we'll have to take any such decision in consultation with our JV partner. So we are very respectful of the sentiments of our JV partner, and we will, at some stage, we will engage in this talk. Another thing which I must mention is that mutual fund is as far as capital is concerned, it's very capital light industry. So if at all we will be going for monetization of this asset, it will be essentially for value creation of the existing shareholders, and also for value creation for the incoming shareholders. So that is what the motto would be. So I think at the opportune time we'll be reaching out to the market, and as and when we so decide, we'll certainly come and share our decisions with all of you.
Okay. I think you briefly mentioned it, but I wanted a little more details. At an industry level, how much pain should one expect from the moratorium loans Q3 onwards?
I think I don't have an assessment for the industry as a whole, but I think one thing is very clear. Practically all banks are on the top of it. They're all evaluating their asset book, and they're all preparing themselves for whatever is required to be done. But at the same time, I must mention the kind of the resolution mechanism which has been suggested by RBI, which has been, and also approved by the board of various banks. I would say that it is a very, very pragmatic resolution mechanism. So I think more than the stress, perhaps there would be a very conscious effort on the part of the borrower as well as on the part of the banks to get into the resolution process faster, because here is a situation where the stress which will come to various corporates will be essentially on account of the macro in the economy. It will not be on account of the inherent weaknesses in those corporates. So the inability of the corporates to navigate these macros has actually will lead to the stress.
Fair point.
So with the situation that if the macro improves, which I'm actually a firm believer that the way we have seen the demand emerging with every unlock. So I think once the unlock is strong, and once the COVID is behind us, I'm sure the recovery is going to be V-shaped. And once the recovery is V-shaped, in that event, whatever resolutions will happen, I would say that the resolutions will be more of a success.
Okay. Now, Mr. Khara, how many loans need an ICA signing, and how many have been signed ICAs?
Lata, honestly speaking, I would not have the numbers. But in general, if I may say so, impressions, I think ICA also, practically all banks are mindful of the fact that if at all the resolution mechanism has to get triggered, there has to be ICA. So I think people will be coming on board for the ICA.
Yeah, the June 7th circular was not that inspiring. We had hardly a handful of ICAs signed. So that remains a bother until one sees them signed. Mr. Khara, only one bank has announced numbers. And although it's a very small bank, not comparable, it has shown a decent expansion in margins. Can we see that as a trend across the sector this quarter?
I think it would be very difficult to really comment upon for the sector because each bank has got its own peculiarities. So I would not be in a position to comment on that.
Cost of money has fallen a lot. So, I mean, therefore, can we see this as a trend, was my question.
Cost of money and also the cost of credit. Credit cost is
okay. All right. Okay. Yeah, I know. I know it falls on both sides, but since Karnataka Bank reported a fairly big jump, I mean, almost 20 basis point jump in margins from Q1 to Q2, I was just wanting to know if that will be something other banks will more or less replicate. You don't think so?
I think we'll have to wait and watch for the results of each of the major banks.
Okay. Well, finally, I wanted to ask you if you're seeing any specific area of loan growth. What is the number you are working with?
We are looking at retail we should witness decent growth. And if we get to see the V-shaped recovery, I expect maybe in the last quarter, we might get to see some decent growth in the corporate book also. But one thing is for sure, I mean, corporates are very open to look at the market instruments. And we have got a very large treasury with us. So we are very keenly looking at opportunity for investments also.
Okay, but they are not, I guess the corporates are not biting just yet. That is the big problem, loan demand?
No, I think it is, see, what happens is that capacity utilization is a very, very major factor.
Okay.
As now the capacity utilization being 69% odd. So naturally, the credit offtake is a function of the capacity utilization, and also the fresh investments will also probably come in once there is a definite improvement in the capacity and very clear visibility of the demand. Okay. I think the steps which have been taken by the government in the recent past, I'm sure will go a long way in terms of demand generation, and which eventually will kickstart the capacity utilization also, and also investment demand, as well as the working capital demand in the corporates.
Okay, we are hoping for that, and the CEA and Sanjeev Sanyal have been telling us that some more infrastructure projects are in the pipeline. Thank you very much, Mr. Khara, for spending time with us, and from all of us in CNBC TV18, here's wishing you a very successful innings at State Bank.
Thank you very much, Lata. Thanks a lot, Anuj, and also Sonia. Thank you. Thank you very much.
All right, we have to take a break on that note, and then we get back to markets and earnings and everything that markets are interested in. We're going to have Nigel D'Souza joining in, along with an external expert on the cement sector, Naveen Sahadev of Edelweiss. In our familiar offering, Quarter Se Quarter Tak, we are going to look at the expectations from the cement space.